जी, अस्सलाम वालेकुम. Now our next topic is comparing merchandising and manufacturing activities. This is one of the most important topics, we can say that one of the most foundation level topics which we must study prior to going into a detail of managerial accounting. In particular, that like we will be studying about how to prepare cost of goods sold, how to prepare cost of goods manufactured. So until unless we don't have a clear understanding about these two different types and nature of businesses, we will remain confused. Because in your numericals and your questions, you will be encountering with so many things which will be coming from a service industry, which will be coming from different industries. So under production or manufacturing industries, we have two clear distinctions, which is manufacturers and merchandisers. Who are merchandisers? Let me be very simple here. Metro is a merchandiser. Walmart is a merchandiser. Carrefour, or you can say that the Hyperstar, is a merchandiser. Aslam is a merchandiser. Rainbow is a merchandiser. They usually purchase manufactured goods and only sell that good. They have that outlet. They manage the supply chain of that finished goods. That they are merchandisers. And the manufacturers are those who purchase raw material, process that raw material, and convert it into a finished goods and then sell it to some merchandiser. So that is a difference between a merchandiser and a manufacturer. A merchandiser buy finished goods and sell finished goods. The manufacturer buy raw material, produce and sell finished goods. You are a textile firm, textile company. You are purchasing raw material, converting into either thread or a cotton fabric. You are a manufacturer. Supposedly, they are selling into Bonanza. Bonanza is now in such case, I don't know either Bonanza has its own production unit or not. Supposedly, Bonanza purchased from Sitara Textile, from AVDC company, and they have best designer, they have best printer there, and they change that into as per their requirement, or even do not change, just convert into a fabric of their desire. Even they are also manufacturer and merchandiser. Okay, if they are changing something into it, then they are manufacturer. But if they are just purchasing and selling, that is merchandising. Why I'm explaining here? If you recall your financial accounting classes, you will come to know that you have studied, if you recall that lecture, you have studied income statement and balance sheet. And in balance sheet, there was asset side, liability side, and honor equity side. Is it not? So, if you are just selling and purchasing, then it means your long-term asset side will be quite lightweight. For example, if I'm a production unit, my fixed asset size will be very heavyweight. I will be having machinery, plant, land, a biggest factory where I'm producing a large number of labor. If I'm just merchandising, I will be relying on labor only. I will be having a storing capacity facility. I will be purchasing and selling, and I will be having a short-term asset because I'm purchasing and selling. Majority of my assets will be current here, and in that case, a large portion of asset will be a fixed as well. So the nature of asset change, and if the nature of asset change, the balance sheet structure will also change. So inventories of manufacturing business. They purchase raw material inventory, they send it to the factory, which is a work on process inventory, and then they send it to the factory and that converted into the finished goods as a completed good. What is work in process? You have purchased cotton. Cotton came into the factory from the warehouse, and then you started working on it. But once that cotton is arrived, there was a cotton whom with the work was also in process. they were already having some cotton and they were working on it. So once the cotton arrived, they will start working on it. So that process is known as work in process. That the process during two extreme, from raw material to finished goods. The process in between these two type of inventory is known as work in process. The time they will convert, for example, they have converted that cotton into the fabric, but that fabric isn't painted yet. So still it is not a finished goods, it is a work in process. If some work is left on a product, that is known as finished goods. Until the product is not ready to be sold, it cannot be declared as finished goods. So they will send that raw material to warehouse and that will be considered as work in process. And once the work will be finished, they will send it to the godam or showroom where they will sell that. So that is how inventory flow into the manufacturing business. Okay? And now this is something very tricky to understand. Now we will link that flow of material to our classification of cost. They will purchase direct material. That direct material will go to the factory. Okay, direct labor and manufacturing overhead will be applied to that. For example, they have purchased 200 tons of cotton, direct material. That came into the warehouse and warehouse sent that direct material to factory. And in factory, we applied two more costs, direct labor and manufacturing overhead. Direct labor and manufacturing overhead. So once they applied that, raw material will be converted into the finished goods. And from finished goods will be sent to finished goods warehouse, and then that goods will be sold to the general public or the ABDC companies. Maybe they will be sold to merchandiser, or maybe they will be sold to end user. There can be either option. Either that company is directly connected with the user, or they maybe are mediating through merchandiser. So this is how. Now the total cost will be direct material plus direct labor plus overhead. This is total manufacturing cost. Okay? And we should skip this topic from here. Now coming, balance sheet. The merchandiser balance sheet is a current asset which comprises of cash, receivable, prepaid expenditures and merchandising inventory. Whereas manufactured, cash, receivables, prepaid expenses, inventories. Now, here inventories is only merchandise. आपने लिया और आप बेच रहे हैं. But now inventories are of three types. Raw material. Look, you have purchased raw material. But ideally, you are not consuming 100% of raw material. Okay? Many of the time, or 99% of the time, you have a bulk of material ready to be sent to the factory. You purchase in advance to avoid any uncertainty. Similarly, I told you that every time there is a certain amount of inventory which remain in process. Either 70% of the material which was sent through if 100 ton of the material is sent from that warehouse to factory, out of that 90 tons material is consumed and turned into the finished goods. Maybe at the end of the day, 10 tons material left because the paint machine is not ready, or maybe they have finished their work and now they will start from tomorrow. So today that 10 tons is still not finished, or there is a little work done left on that material is known as work in process. So another inventory will be work in process, and the last inventory will be finished goods. They will be the goods which are completed and are sent to showroom for sale, either to merchandiser or to end user. Now I have categorized it and explained it. Material waiting to be processed. Raw material is the material which is waiting to be processed, that still we have to send it to the factory. Work in process, partially complete product, some material, labor or overhead has been added. मतलब उनमें कुछ ना कुछ रह गया, कुछ मटेरियल का काम रह गया होगा, maybe you need extra labor, maybe you need some overhead left, and when everything will be done, that will be converted into the completed products awaiting for sale. So once we will be making CGS, cost of goods sold, basically we will be working with all these three inventories. How? Let me explain in next slide. Look it up. Now listen me carefully. Close your pen. Let us divide a production factory into three units. Okay? Into three units. Raw material warehouse. Okay? Factory. Factory. Showroom. Okay? Now you will explain, you will memorize it in a way I'm explaining to you. Okay? Raw material. The first inventory is a raw material inventory. Now this raw material inventory has three subtypes of inventory. How? This is our raw material showroom. Here you have purchased the raw material. Okay? Raw material. But once you have purchased a raw material, there must be some initial raw material which was left over from the previous day or previous month. Definitely that warehouse is not empty. There was some amount left from the previous production. And why? I will explain while I will be teaching busting. Once you are budgeting, you intentionally leave some extra amount, you intentionally purchase some extra amount to put into the next cycle. So that once you are starting the next cycle and your delivery is delayed, so you can continue with your amount. Okay? So that is initial raw material inventory. It means, if for example, if you have purchased a raw material worth of 8 million and there was already 1 million of what was available in your store as an initial inventory, so now the total raw material available is of 9 million. So now you have 9 million of raw material at your disposal and you can use it for the production process. But as you were received with an initial, so you will also leave some amount left over for the next production cycle. Supposedly, you have consumed 7.5 million of that raw material and put that into the production. Okay, and you left 1.5 million of ending raw material inventory. So now from here we got an idea that raw material has three types of inventory. Initial raw material, okay, purchase raw material, and ending raw material. Got it? Okay. So similarly, you will transfer that 7.5 million to here. Here we also have a similar pattern. Initial work in process, because the amount you transfer from raw material warehouse to factory is considered as work in process, which I have recently explained. So now there will be some initial work in process. We suppose that last month they left around 2.5 million worth of product whom they were having some leftover works on them. So the total production facility has now around 7.5 plus 2, 10 million. So now the total work in process is 10 million. This 2.5 is initial work in process. This is you have placed into the production. The total work in process is 10 million. Supposedly 8 million worth of goods are finally finished and sent to the showroom. So now the ending work in process will be 2 million. Yeah, the amount you are leaving into in warehouse for the next cycle. You were welcomed with 2.5 million as initial. You added 7.5 million of work in process, and you left with 2 million. And now you are here in finished goods. Here you are again welcomed with 3 million of finished goods, which were awaiting for sale. You have added 8 million. That is initial finished goods inventory. You have added finished good inventory of 8 million. The total is 11. Supposedly 7 million sold out, and final finished goods inventory is 4 million. You were welcomed with 3 million. You added 8 million, and you left with 4 million. So now, if we sum up all these, we can say that it generates 3 inventories: initial raw material purchase, ending raw material. Okay? Initial work in process added, ending work in process. Initial finished goods added, okay, and ending finished goods. And I will be happy to tell you, if you add all these three, or add separate all these three, and add direct labor and overhead, you will be ready, or you will be reaching on your total CGS figure. The total CGS is just to add all that. For example, let me be open here, plus minus this, plus minus plus minus. It will be total direct material. We will add total direct labor, MOH, and it will be CGS. Getting my point? So this we will practice in our coming lecture. In coming lecture, I will explain how to prepare a cost of goods sold statement. Okay, thank you so much. Here I will repeat whatever we have studied so far.